Assalamualaikum, my name is Siti Afiqah Zahirah binti Jumhari. Today I would like to present my mini research on asset and fund management during the pandemic. The topic that I would like to present is COVID-19 ways fund manager can find bucket of opportunities during pandemic in Malaysia. Let's see to the next video. COVID-19 has caused an economic downturn beginning in 2020 until 2021, making it an extremely difficult year for Malaysia. In response to an increase in the prevalence of COVID-19 infections, the government has taken new measures to control this outbreak through the Movement Control Order (MCO) that can have a negative impact on the country's economic growth. The subsequent political and economic uncertainties have increased the volatility among major asset classes. As a result of the outbreak, the nation's economic performance suffers significantly as well as people face unprecedented level of risk, while financial services are disrupted, making the environment irreversibly transformed by the COVID-19 pandemic. Malaysia's economy is expected to revive in 2021, with growth ranging between 6% and 7.5%.
There are three ideas for fund managers to consider in gaining opportunities during the pandemic, which are to focus on fundamental analysis, initiate ESG asset allocation, and exchange traded fund. This idea will be further discussed in the next chapter.
It is possible for active fund manager to recognize the abundance of opportunities in both the stock and alternative investment areas. It is believed that it is critical to identify the suitable manager to determine the appropriate market, analyze the fundamentals of equities, as well as how the outbreak may affect both market landscape and the performance of certain sectors in the near future. Fundamental analysis involves the study of examining any information that is believed to have an impact on the price or perceived value of a security. It is crucial for a fund manager to adopt a fundamental approach in analyzing financial data to determine the status of stock in the market for the long term. The two approaches of fundamental analysis are known as bottom-up and top-down approach. Okay, the first one is top-down strategy. An investor begins his or her research by taking into account the entire economy's condition or well-being. An investor will attempt to examine the overall performance of the economy by assessing different macroeconomic variables such as inflation, interest rate, and GDP levels. Through this process, fund managers play a role in identifying the industrial sector that provide the most promising investment opportunities. From that, the fund manager can evaluate specific prospects and potential opportunities among the various industries that they identify. Finally, they will select the most favorable companies within the industrial sector. In contrast, bottom-up analysis begins with a single stock and expands to include relevant aspects which influence the price of equities. Instead of beginning with a broad overview of the market, the bottom-up strategy initiates with a detailed examination of individual stock. Bottom-up investors believe that individual equities can outperform the respective industries, which they believe is a valid point of debate. The bottom-up method focuses heavily on different microeconomic aspects, such as a business's earning and financial measure, rather than macroeconomic variables. Using this approach, analysts can construct a detailed analysis of each firm, allowing them to obtain a deeper understanding of its activities. Next is asset management manager should pursue the fast expanding initiative in ESG, which stand for environmental, social, and governance issue. According to the World Bank, most markets experienced a significant downturn from the COVID-19 pandemic effect on the overall economy during the first quarter of 2020. However, despite the overall trend, investment into environmental, social, and governance fund remain healthy because the industry sustained strong level of investment. ESG-oriented strategy looks to measure and evaluate cooperation under these three categories, which is directing investment into well-governed, trade their societies and employees in a responsible manner. It is remarkable that ESG had performed far better than the market as a whole. Customers' portfolio in Asia has become more diverse as a result of the rapid growth of the ESG market. There has been an increase in responsible financial development during the past few years. Many companies have begun to take ESG more seriously after the COVID-19 in the late 2019.
For instance, a new robo-intelligence-based digital platform for sustainable Sharia ESG investment called as Best Invest has been introduced by BIMB Investment Management. There are a variety of alternative investment selections such as global stock, sukuk, and money market fund.
The COVID-19 situation has offered active fund managers a more opportunity as ETFs have grown increasingly popular as an investment instrument, generating an increased percentage of inflows. Active fund managers are encouraged to take advantage of opportunities in emerging markets. particularly during times of financial crisis, as ETF could be a good option for investors who are interested in new growth industry in a few publicly listed companies. Despite how Malaysia ETF are having difficulty in gaining traction, it is likely to expected growth as it will be more measured than in previous year. As a result of COVID-19, the process of digitalization will move more quickly, it is a positive development.
In conclusion, there were still a lot of investment opportunities available to consider in gaining opportunities during the pandemic, which are to focus on fundamental analysis, initiate ESG, asset allocation, and exchange traded fund that fund manager can find. Thank you for watching my video.